Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. An immediate countering key reversal down and bearish engulfing pattern yesterday. The fall pierced, however, still closed above the wealth of congested moving averages below, consisting of the flatlining medium moving average, currently at 74.14, the flatlining short medium moving average, currently 73.86, and even the falling short moving average, currently at 73.85. It nevertheless tempers the rise we have seen since the bull hammer of last week. It also raises the doubts once more as to whether to revive my recent suggestion that we might have a possible reverse head and shoulders type pattern here since the start of 2022. And so far today, a gapping open lower since filled in, but the drop went down below the combination of the long moving average, currently at 72.86, and the Fibonacci congestion between 71.79 and 71.85. We now have some light congestion previously highlighted in the 72.16 to 72.29 area. But the next real support is the area covered by the two 50% Fibonacci lines. These are the July 2021 to February 2022 move at 71.85 and the very recent March to April move at 71.80. What happens there will be key, as the recent action has raised the idea that the mid-April to date action may be a type of declining or descending, expanding wedge pattern. German DAX futures. A combined bearish engulfing pattern and outside day yesterday, as the market tried higher, opening over the upper trend line, currently 14.185 of the late March to date descending expanding wedge pattern, which is synonymous with the upper trend line of the of January to late March bearish shift pitchfork. It was also just underneath the combination of the start of February to date downtrend, currently at 14.315, and the 50% Fibonacci line for 2022 at 14.343. But then falling down through a mess of supports between 14.079 and 13.804, finally slowing down due to attrition just ahead of the February 2020 low at 13.821 and the 50% Fibonacci line, the October 2020 to November 2021 move at 13.804. Prices finished up within this congestion zone just under the combination of the short stroke medium moving average, currently at 14.028, and a congestion at 14.036. Now so far today, a gapping move lower since filled in that punched prices below the congestion between 13.804 to 14.079. We're now back well within the descending expanding wedge pattern and the bearish shift pitchfork. But further below we have some light congestion at 13.636, but the next support band is the one that held up prices last week between 13,300 and 13,356. US E-mini S&P futures. An immediate countering daily key reversal down and bearish engulfing pattern yesterday. This one punched down through a wide congestion zone between 39.59 and 40.55, which includes the 50% Fibonacci line of the October 2020 to January 2022 move at 40.18 and the February 2021 high at 39.59. Prices finally halted at the crossover of the lower time, currently 39.15, of the bearish shift pitchfork and the middle time, currently 39.11, of the bearish Andrews pitchfork. Both actually for the same period, the January to March move. I've previously warned about time crossovers here, and this market is a case in point. You see, when we see times crossovers such as this, you should look out for one or more of the following to occur on the day or very soon thereafter. Volatility, a change in trend, or a reinforcement of trend. Hence my caution. You see the time crossover circled in red. I'll look on the chart on the just immediately to the side of my image. Additionally, we have another time crossover of the upper time of the bearish Andrews pitchfork, currently at 42.88, and the middle time of the bearish shift pitchfork, currently at 42.15 in a few days' time. It's actually on the 7th of June, hence I renew my warning and what to look for. This crossover is also circled the rev and is just above. This will only become redundant if one or both of the pitchforks are retired. So far today, a renewed move lower, due no doubt to the tying crossovers as prices have dropped down to test the lows of last week at 38.55. Right now these have held, but it would not take much to nudge lower the market to make this week's action a possible weekly key reversal, so watch this space. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the written disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investors International Limited. And here comes the final bit.